In today's video, I'm going to explain to you how you can save potentially hundreds of $1,000s in taxes using a strategy that almost nobody talks about, and it's called tax gain harvesting. I'm Raul Shah. I'm the CEO of DocShah Financial. We are a wealth management firm that helps retirees and pre-retirees save a ton in taxes, and this is one of the tax planning strategies that we use with clients when it's appropriate. The slides you're seeing are directly from the retirement planning course I teach at Johns Hopkins University, which is also my alma mater. So tax gain harvesting. It's very simple to understand. There is a 0% capital gains tax bracket that most people are not aware of. And if you sell a stock up to that threshold, your long-term capital gains are taxed at 0%. Now, I should note here, this does not apply to short-term capital gains. It's only for capital gains that have been held for over 1 year, meaning 366 days or more, not 365 or less. The beauty of tax gain harvesting is really twofold. Number one, you get to realize a lot of long-term capital gains completely tax-free. And number two, there's no IRS wash rule, meaning you can buy back your stock the second you sell it and immediately raise your cost basis, thus making any future gains that you accumulate tax much lower because the cost basis is a lot higher. So if this sounds confusing, don't worry, we're going to break all this down in just a second. But the first thing we need to do is go over the 4 main steps of how it works. So we're going to use a married filing jointly couple here for this example in just a second. Now, step 1, when you're trying to do tax gain harvesting, is you're going to look at your taxable brokerage account, which is the only account this really applies to because your retirement accounts don't have any ability to recognize capital gains in the year that you buy or sell securities, right? The tax deferred accounts are just that, they're tax deferred. The tax free accounts are just that, they're tax-free. So in our taxable account or our brokerage account, that's when we can sit there and apply tax gain harvesting. So step 1 is we're going to figure out what's the 0% long-term capital gains tax bracket. So for married filing jointly couples in 2026, that number is $98,900. Step number 2 is we're going to look at our long-term capital gains in our account, and we're going to try and sell stock up to that threshold so that we don't exceed the 0% long-term capital gains rate. Step number 3 is we don't pay any tax on that gain because we stayed within the long-term capital gains tax bracket of 0%. Step number 4, if we want to, we can immediately repurchase the stock back and there's no IRS wash rule. And I guess a step number 5 here would be that your future gains, like I said, are going to be taxed at a lower rate. But that's kind of down the line. There's really just the 4 main steps there as far as executing tax gain harvesting in the year that you're trying to do it. So let's take a look at how this works. And we're going to use the example on the right side of the screen first. I know there's a lot of info on the screen, but just kind of focus at the table there on the right for a second. The 0% long-term capital gains rate in 2026 for a couple married filing jointly is $98,900. Now, let's say this couple is 65. They haven't claimed any Social Security yet. They don't have any pension. They don't have any income. So their income is 0, but they might be sitting on really long-term capital gains because they've been index fund investing or buying individual stocks in their brokerage account, and they've got these massive long-term capital gains. Well, they could sell $98,900 of capital gains. And remember, it's not $98,900 of stock because that's just the stock, the market value. You have up to $98,900 in capital gains, long-term capital gains that you can sell. So in reality, depending on the actual gain in the stock, you might be selling $150,000, $200,000 of stock completely tax-free. Now, in this particular example, we have a couple who's 65 or older, like many of you watching this, and you have a lot of senior deductions and the standard deduction that you get to claim. The total of that in 2026 is $47,500. In essence, we can basically take the long-term capital gains threshold, add in all of your deductions, and that's how much you can sell in long-term capital gains and not pay any tax on it. And when we add that number up, we can see that the total long-term capital gains to harvest is $146,400. So again, depending on your capital gain and how much your stocks and index funds have appreciated, you might be selling $200,000, $250,000, $300,000 of stock. Embedded within that is $146,400 in capital gains, and it's all taxed at 0%, assuming, like I said in the example, you have no other income. If you have other income, it's very simple. You just figure out the difference between the threshold of your long-term capital gains tax bracket with your deductions, how much your income is, and that will tell you how much you can sell in long-term capital gains completely tax-free. So, for example, if this couple had, let's say, $50,000 in income, well, we're just going to take that $146,400, subtract out $50,000, and that's going to ultimately tell us how much in long term capital gains that we can realize completely tax free. So, in that example, a couple could realize $96,400 in long term capital gains completely tax free. And remember, you can buy that stock right back. So let's say it's a stock that you really like. Let's say you bought Nvidia and Nvidia went up like crazy and you've got 146,400 in long-term capital gains. Well, great. You can sell it, not realize any capital gains, and you can buy it right back. And now what you have done is you've raised the cost basis on your investment. So now all the future gains are now taxed with a much higher base than it was originally. So you ultimately are going to pay even less tax in the future. Tax gain harvesting, if done strategically in those pre-retirement years or even in those early retirement years, is an unbelievably powerful strategy to save potentially hundreds of thousands of dollars in taxes. Not necessarily all in one year, but it's a strategy that gives you benefits for many years to come. And if you're interested in how I use this strategy and a lot of the other tax planning strategies that I talk about on this channel with clients, just shoot me an email, raul@DocShahFinancial.com. I'd love to hear from you and your personal situation and how I can help you pay less in tax. And until then, subscribe and I'll see you in the next video.